Hello and welcome to ABiQ's webinar for the month of March. I'm delighted to have with me Ismail Dessai. And we're going to talk today about Sukuk as a funding solution for projects in Africa. So first of all, Ismail, thank you very much for joining us again. We're delighted to have you on board, and we're all looking forward to hearing what you've got to tell us about Sukuk and how this works, and how it could be a source for project funding for all these projects that we have in Africa.
Thank you very much, Emil, and thank you to all the attendees and participants of today's webinar. Today's discussion and event will cover Sukuk Islamic bonds as a funding mechanism, and we'll also discuss the structure of Sukuk. How is a Sukuk issued? What are some of the fundamental issues from a Sharia perspective, and basically what are some of the methods of obtaining Sukuk funding globally. So with that I'd like to take you through today's slideshow presentation, which will consist of approximately 20 to 30 minutes. And thereafter, we will have a Q&A session if you have any questions. But in the interim, if you do have any questions, you can post them in the chat section, and we will attend to those questions after I had completed my lecture. So without further ado, I move over to the next slide, which discusses an outline of today's presentation. So essentially, we will cover some of our credentials, some of the Islamic financial products that we've developed, and some of the advisory services and services that we provide. We'll thereafter go on to an introduction to Sukuk or Islamic bonds. We'll also cover the difference between Sukuk and conventional bonds, and then we'll discuss some of the structures of Sukuk, and thereafter we'll discuss certain contemporary issues, including the route to market and how to access Sukuk funding, etc. Next slide. So here are some of our credentials in terms of some of the work that we've done over the past few years. We've advised various institutions globally, like Ethica Institute of Islamic Finance, Botswana Life Insurance Limited, Hijaz Financial Services in Australia, and we advise various governments and central banks on Islamic finance. Next slide. These are some of the products that we have developed, including developing a Sharia compliant real estate and asset management funds. We've also developed Sharia compliant Sukuk for the South African market. We've issued various fatwa, Islamic legal edicts on Islamic finance, and we've conducted training for various bankers globally on Islamic finance. Next slide. Next slide. So these are some of the services that we do provide from a Sharia compliance perspective. So essentially, we develop a product from scratch in terms of product development. We then certify the product for Sharia compliance, where we have a global group of Sharia scholars that will certify the product for Sharia compliance. We'll also conduct a Sharia review of the products, and we'll also do Islamic private wealth management in terms of providing a suitable Sharia compliant private wealth service. We also provide regulatory assistance to central banks, and we also develop Sukuk Islamic bonds, and we also raise capital. So our track record in terms of Sukuk is that we have done deals of close to $6 billion in terms of issuing Islamic bonds in the market, and we work with various global syndicated group of banks, including Standard Chartered Bank, Société Générale, the French Investment Bank, etc. And we are perhaps unique in the market, where we have the Sharia expertise plus the structuring expertise in terms of structuring a sukuk from scratch right up to being completely funded. So these are some of the services that we do provide as Global Islamic Financial Services. And obviously, you can find more about us on our website, www.gifsrv.com. Again, www.gifsrv.com. I've also authored a book called Your Brief Guide to Islamic Finance, and you can download this book from our website also. Next slide. So this is our motto: embracing Islamic finance through Sharia compliance and achieving new heights in expansion and growth. Next slide. So we now go into an actual introduction to Sukuk. What exactly is Sukuk, and what is the technical definition of Sukuk? So Sukuk are essentially certificated Sharia compliant financial instruments. So in other words, it is almost like a wrapper around a Sharia compliant or an Islamic finance transaction. So just as you have different mechanisms of Sharia compliant funding like musharaka, mudaraba, ijara, etc. Sukuk is basically a certificated structure of a Sharia compliant financial transaction. So it is essentially like a wrapper around a Sharia transaction. Sukuk are always linked to underlying assets representing partial ownership in the asset. So this is critical and important because one of the main differences between a conventional Sukuk and a conventional bond and a Sukuk is that the conventional bond could be asset linked and not asset backed. But in the case of a Sharia compliant bond, it is essentially asset backed, where it represents partial ownership in the asset in effect. It is usually translated as an Islamic bond and is the most active Islamic debt market instrument. So just from a numbers perspective, last year, despite COVID, there was approximately $140 billion of Sukuk that was issued in the market. And the previous year, close to 160 billion. And it is anticipated that in the next 5 to 10 years, the global Sukuk market could go up to $500 billion. There is a huge push by central banks globally to diversify the funding base. And obviously, with the recovery of the COVID pandemic, we would see a lot of institutions and large corporates seeking to raise capital via Sukuk as an alternative funding mechanism. So the Islamic capital markets are viewed to be very deep, and there is huge opportunity in terms of Sukuk and Sukuk funding. So the word Sukuk is derived from the Arabic word called sak, which refers to essentially a certificate. So Sukuk is obviously the plural of the Arabic word sak. So in terms of the Islamic Financial Services Board definition, in terms of the technical definition, it refers to certificates that represent the holder's proportionate ownership in an undivided part of the underlying asset, where the holder assumes all rights and obligations to such asset. So this refers to a Sukuk in terms of the IFSB technical definition. So what are some of the benefits and objectives of Sukuk? Why would an institution look to issue a Sukuk or an Islamic bond? So obviously, there are various benefits, including expansion of the investor base, where it would be via diversified funding source. There would be liquidity for the secondary capital markets, raising of Sharia compliant funding, Sharia compliant investment opportunities, Sharia balance sheet management, and tradability. So from this perspective, you can see that there are various benefits of having or issuing a Sukuk and an Islamic bond. The Sukuk holders are exposed to asset level risks, and the Sukuk income is based on asset ownership and not on revenue rights. So as I've mentioned, that one of the key fundamentals between a conventional bond and an Islamic bond is that a Sukuk is basically asset backed and not asset linked. So as a Sukuk holder, you are exposed to asset level risks, and the Sukuk income is based on the actual ownership in the asset that the Sukuk holders have purchased. Next slide. So what are some of the general Sharia guidelines or Islamic guidelines around a sukuk, around an Islamic bond. So all of the transactions obviously need to conform with Sharia law. There is a prohibition of interest. So instead of saying we pay interest, when it comes to sukuk, as we said, firstly, it is asset backed. Secondly, is that instead of paying interest, instead of paying interest on a sukuk, you now pay a fixed rate coupon. So you pay a fixed rate coupon, which is essentially like a profit rate that is paid over to the sukuk holders. So in the instance, let's say you have a sale and a leaseback transaction where the sukuk holders purchase an asset and then lease it back to, let's say, the government of Saudi Arabia, for example. In that instance, the sukuk holders would be charging a fixed rate lease on a monthly basis to the government of Saudi Arabia. And on that basis, they would then receive rental income from the bond that has been issued in the market. So obviously, this is not termed as interest. This is a fixed payment that is received by the sukuk holders. And trading between parties is acceptable. There is a prohibition of speculation or gambling. And there is avoidance of uncertain or excessively risky transactions. And there is a prohibition of investment in unlawful goods and services. And there's obviously sharing of risk between the parties, because you, as a sukuk holder, would take asset risk on the transaction. Next slide. So what are some of the specific Sharia guidelines for sukuk? So the funds have to be raised for Sharia compliant activities, and you will also see this in the prospectus that is issued for a sukuk bond. So if you go online and you search for a sukuk prospectus, you will find that there are specific Sharia guidelines in the prospectus document issued by global banks and institutions. All the funds raised may be used to finance tangible assets. The specificity of the assets is important. So sukuk, unlike conventional bonds, cannot be used for general financial needs of the issuer. So this is critical and important, is that sukuk cannot be used for working capital, etc. It has to be backed by a physical asset, and thereafter the funds can be used for whatever purpose. Non-tangible assets may be used based on urf and hada or norm, subject to the Sharia board approval. So this is important, where when we talk of assets, we don't necessarily refer to only tangible assets. We could also use non-tangible assets, and there are instances in the market where non-tangible assets have been used for sukuk. So things like, the flying hours of an airline, in terms of those rights, are then ceded over to the bondholders or sold to the bondholders, and then those rights are then leased back. So that is also permitted. Obviously, once these rights are established as a valid form of monetary value from a Sharia perspective, then in that case, we can then use those assets, even though they are not tangible, as a Sharia compliant asset that can be used in a sukuk funding transaction. So through that discussion, you will find that there is discussion around funding intellectual property rights, etc. And it then becomes much more sophisticated in terms of the types of funding that can be done. So I would then say that sukuk is a very flexible model of funding, and it is not very restrictive, as some would state. So the income received by sukuk holders has to be derived from the cash flows generated by the underlying assets. So in the instance where you have, as a sukuk holder, have purchased properties belonging to the Saudi Arabian government and sold it back to them, where you have purchased it and then leased it back to them, then in that instance, you would ensure that the sukuk, as a sukuk holder, that you would receive income from the direct cash flow of those assets. There is a clear and transparent specification of rights and obligations of all parties to the transaction, in particular the originator, the customer, and sukuk holders. So there has to be transparent specification of rights and obligations of all the parties, and this is what Sharia compliant funding is all about, in terms of ensuring that the mechanism is 100% Sharia compliant and transparent. And then there would obviously be a generic Sharia compliance screening to ensure that the underlying activities are compliant. Next slide. So here are more guidelines. All the rules of original contract on the basis of which sukuk are created should be applied. So if the underlying mechanism of a sukuk is an ijara structure, for example, then that mechanism would then be used in terms of the underlying rules that would be applicable for that sukuk. The issuer cannot guarantee the face value of the certificate for the holder except in case of negligence or misconduct. So the face value cannot be guaranteed simply because you are taking asset risk on the transaction. In sukuk based on sale and leaseback, the issuer can unilaterally undertake that he will purchase the asset after 1 year for a pre-agreed price. So when it comes to sukuk where it is a sale and leaseback, then the issuer can also undertake that they will purchase the asset after a fixed period of time. So generally it's, say, a 7-year sukuk maturity or a 10-year sukuk maturity. Then the issuer would then make an undertaking to purchase that asset back after 7 years or 10 years, for example. There are different types of reserves that could be created, like a profit equalization reserve or a takaful pool, which is an indemnification pool that should be created that serves as a cash buffer for the sukuk holders to protect them in terms of liquidity. Only those sukuk can be traded that represent proportionate ownership of tangible assets, usufructs, or services. So in terms of the tradability of sukuk, sukuk can be tradable on the secondary market, but it will only be effective for a proportionate ownership in terms of specific rights. In sukuk of musharaka and mudaraba, which are partnership sukuk or equity-based sukuk, the issuer can redeem the certificates on the market price. The purchase undertaking is allowed, however, the purchase price should be market value of the underlying assets. So in the instance where, let's say you as a sukuk holder partner with a developer to build certain, housing assets or units and then sell that off in the market. And it is done on a partnership basis. So on that basis, then the profits can be shared accordingly. And the assets sold by the sukuk holders to the issuer or developer based on a market-related price and not a fixed price. Next slide. So we now come to the differences between conventional and sukuk. So if you look at the sukuk, each sukuk unit represents an ownership of the underlying asset. And if you look at a conventional debt instrument, so bonds represent pure debt obligations due from the issuer. The majority of the sukuk corresponds to the term of the underlying project or activity. And if you look at a conventional debt instrument, the core relationship is a loan of money, which implies a contract whose subject is purely earning money on money. So it is purely a loan rather than being an investment into an actual asset that produces a return. The Sukuk prospectus contains all the Sharia-related rules related to the issue. The issue prospectus does not include Sharia constraints in a conventional debt instrument. In a Sukuk, the underlying asset has to be Sharia compliant. And if you look at in a conventional debt instrument, it could be any sector. The Sukuk manager is required to abide by Sharia rules in a Sukuk. But if you look at conventional debt instruments, then it can be used to finance almost any purpose which is legal in its jurisdiction. When it comes to Sukuk, the Sukuk holders have the rights to profits but also bear losses. And in a conventional debt, the bondholders are not exposed to losses on the asset, although they may bear losses in the event of insolvency by the issuer. So if you look at the differences between conventional debt, between a conventional debt and Sukuk, there are some fundamental differences, including the fact that on the Islamic side, in a Sukuk, the transaction is backed by an asset, so it is not merely a loan or interest on a loan. And all of the activities are screened for Sharia compliance. And the Sukuk holders will bear the profits. They will have the right to the profits, but also bear losses. And when you look at the conventional debt side, the funding could be for any activity as long as it's legal. But generally, the bondholders are not exposed to losses as they are deemed to be secured creditors as opposed to all other investors and funders. So these are some of the fundamental differences between the two. And obviously, to a certain extent, this differs from jurisdiction to jurisdiction, where there are different legal ramifications, etc. Next slide. So now we go over to the actual sukuk structures. So if you look at a musharaka sukuk, musharaka sukuk is issued with the aim of using the mobilized funds for establishing a new project, developing an existing project, or financing a business activity on the basis of any of the partnership contracts. So basically, a musharaka sukuk is essentially a sukuk that is used for funding new projects, greenfield projects, or even brownfield projects on the basis of a partnership contract. So in other words, that let's say there is a developer that wants to develop 500 units or 500 apartments. The developer doesn't have the capital, but the developer has the expertise in terms of developing these units. The developer has a good track record. The developer understands the market, etc., and has a relevant credibility and integrity. The developer then says, okay, look, we're issuing a sukuk for $100 million, and you will invest into the project where you have a 50% share in the project itself. And whatever profits are derived, then the sukuk holders will take a 50% share of those profits. Now, the rate of return there could be anything from 10% to 20% to even 30%. I have seen certain sukuks where on a partnership basis, investors made a 20% return per annum. So this refers to an equity type of sukuk or musharaka sukuk, where it is based on a participation basis. The next type of sukuk is mudaraba, which is very similar to musharaka, but the difference here is that in musharaka, both the parties contribute capital. So, the issuer and the originator of the sukuk or the promoter of the sukuk, provides equity in the form of, let's say, a piece of land, for example, etc. But in the case of mudaraba, it is simply a partnership where one party, which is a sukuk holders, brings the funding, and the issuer promoter essentially provides the expertise in terms of investing the funds appropriately and procuring a return. Then you have investment agency sukuk, where basically the sukuk holders mandate the promoter to invest the funds in a Sharia compliant transaction. And then you have a murabaha sukuk, where it is issued for the purposes of financing the purchase of goods through murabaha, so the sukuk holders become the owners of the murabaha commodity. So this is what a murabaha sukuk refers to, and this is typically used for sukuk such as the purchase and sale of goods and items, etc. Next slide. So these are various further structures of sukuk. As you can see, you have salam sukuk, which is used, on the basis where funds are used to purchase goods that will be delivered at a later date. An example of this, of a salam sukuk, is like funding commodities like sugar, oil, etc. So you fund a commodity which will be delivered at a later date, and then you have a parallel salam where you, as a promoter, let's say as a bank, is not in the business of essentially buying and selling sugar, for example, but you would essentially sell the sugar to the end user or the end client. An example of this is, you have the Dubai Islamic Bank Salam Sukuk transaction for sugar financing. So they essentially finance or fund the largest sugar refinery in the UAE, and at the end of the term, they then conduct a parallel salam to sell the sugar to the refinery's end client. The refinery benefits because they receive upfront funding for working capital, and the bank benefits because they make a margin when they sell the sugar to the refinery's end customer. The similar thing goes for istisna sukuk. Istisna sukuk refers to where funds are mobilized for production of goods and also infrastructure funding on a build, operate, transfer model. So istisna sukuk is something which is used increasingly for infrastructure funding, and obviously in this instance, We are talking of infrastructure funding in Africa, for example, where istisna sukuk can be used to fund, the development of roads, hospitals, schools, etc., to develop infrastructure for different governments globally. The last two are basically sukuk for agriculture, and this is something where, as a model hasn't been largely established, but there is a huge opportunity to issue, these forms of agricultural sukuk, where farmers can, have access to funding to then become commercially viable, especially in places like Africa, Asia, etc., where there's a huge requirement for development and sustainable funding on an Islamic basis. We could create these structures as opposed to, having these exorbitant type of, funding schemes where farmers are not able to repay back the loans, etc. So this is something where, Suku can be mobilized to fund the development of agricultural projects globally. Next slide. So what is an example of a sukuk? How is a sukuk structured? Now, sukuk, an example of this is a musharaka sukuk. So musharaka is a mode of financing which can be securitized, easily, especially in the case of large projects where huge amounts are required. So let's say, for example, as I mentioned, that you are doing a partnership to securitize, a large, a project for apartments, for example, and those apartments now then need to be, funded, where they are being, either sold off plan, or there's a huge requirement by a government, let's say, to develop a low-cost income housing, for example. So there's a huge opportunity there, and basically an SPV is formed to collect the funds. Investors acquire the assets, serve as a partner in the musharaka agreement on behalf of the Islamic investors. So one of the main rationale behind setting up an SPV or a special purpose vehicle, either as a trust or a company, is to ensure that the funds are ring-fenced and the rights of the investors are protected, where it may have a charge over assets, etc. The obligor serves as musharik and is typically appointed the management agent of the musharaka project. So the obligor would refer to the promoter or the issuer or the originator in the project, which will be typically the government, for example, or a property developer, and they would also manage the musharaka project, where they would serve as a management agent. Every subscriber is given a musharaka certificate that will represent his or her proportionate ownership in the assets of the musharaka. After the project is started, these musharaka certificates can be treated as negotiable instruments. Certificates can be bought and sold in the secondary capital market. So these certificates can then be traded also. Securitization of musharaka can be used for construction of projects and factories, expansion projects, working capital finance, etc. So musharaka is something which is very broad. It can be used for any number of projects, including working capital, expansion projects, etc. Next slide. So this is an example of a typical musharaka, as you can see, that you have the investors that would then fund the sukuk or the trust certificates that are issued by the SPV, which is the issuer and also the trustee of the funds. The issuer would then distribute the cash into the project. The originator, who is also a partner, would also contribute an asset to the musharaka project and serve as a partner to the issuer SPV. And the musharaka would then pay a profit share, or if there is a loss, attributed to the SPV. And the originator, at the end of the term, would also have a purchase undertaking to purchase the project and sell it, and sell it to the investors or the sukuk holders. The originator would also serve as a managing agent, where it would charge a fee or some sort of incentive or commission-based fee to the Sukuk SPV. So this is a typical example of what a Sukuk looks like. And we at GIFS have been instrumental in a number of Sukuks, including Musharaka Sukuks, over many years, where we structure these prospectus documents accordingly and ensure that these structures are Sharia compliant. Next slide. So these are some of the Sharia guidelines of a Musharaka Sukuk. I won't go through them due to time constraints, but we'll go to the next slide. Next slide. So this here is an example of a Ijara Sukuk. And an Ijara Sukuk refers to where it is essentially a sale and lease back of physical assets. So as you can see that the originator sells an asset to the SPV. SPV then leases it back to the same originator, and at the end of the term, the originator purchases the asset back for a fixed consideration. So this is an example of an Ijara Sukuk. It is perhaps one of the most utilized Sukuk structures globally because it has become a very easy mechanism for originators and obligors like governments and corporates to raise cheap capital in a very efficient manner, where investors are protected in the form of physical assets. So for example, the South African government issued a Sukuk in 2011. They pooled together $500 million worth of assets, including government properties. They sold it to the investors. Investors then leased it back to them, and government provided the investors with a purchase undertaking to state that they will guarantee that they will purchase those assets at the end of the 10-year term. So this is a typical a typical example of how the Ijara Sukuk works from a funding mechanism perspective. So with that, we will now come to the end of the first session. But before we conclude, I would just like to provide a few points in terms of the Sukuk, funding structure and how one can procure Sukuk funding. So essentially, Sukuk has typically been utilized by global banks, funds, and institutions, and it has been, utilized by largely corporates and institutional funders, as a mechanism to fund large government projects, etc. We're now, however, seeing SMEs or small to medium enterprises and smaller projects being funded by Sukuk. And typically, the issue has been around the cost structures of funding a Sukuk, and also in terms of the funding constraints of some of the larger funders that seek to fund large projects from $100 million and beyond. But we are now, however, seeing that there are smaller players that are coming into the market that will fund smaller projects from anywhere from $10 million up to $500 million. So there is a change in direction from that perspective. Typically, in terms of the Sukuk funding, you would have access to various global institutions that will be able to fund transactions. However, it is equally important to have a suitable originator and project manager that would be able to put the right package together, that they would then be able to ensure that the structure that is developed is Sharia compliant, and also be able to sell that funding mechanism or structure to global banks and institutions. So we at GIFS are in a unique position where we are able to structure a transaction in a Sharia compliant manner and pool the funders together under a joint syndicated structure, and then fund such transactions. Generally and typically, the timelines for Sukuk in the normal instance would be somewhere around 3 months to fund a transaction. We at GIFS, if you have all of your documents as a project owner, would typically take about 6 to 8 weeks, where we can expedite the process. So I think for us on our side, we are certainly all about speed and efficiency in terms of conducting a transaction in a very efficient and speedily manner. So with that, I would like to terminate the first session and now open up the floor for any questions. And I now hand over to my good friend, Mr. Emil.
Thank you very much, Ismail. It is certainly insightful. Maybe just we've done now together a couple of projects which we've gone back and forth looking at funding and so on. So one of the questions is typically asked is, from a Sukuk point of view, because you're effectively buying into a project. So what is the collateral or the backup that you're buying? I mean, if it's something being developed and constructed, how does that work? Because I need the money to build, but I don't have an asset, that can guarantee or back up, effectively the Sukuk. How would that typically work?
Yeah, so very, very good question. So typically, we have various projects that have, that are termed as greenfield projects. And generally, we have collateral in the form of guaranteed offtake agreements with governments, etc. And secondly is we have takaful or Islamic insurance policies that back the underlying structure. We've also set up a structure where we can take a sub-investment grade project to investment grade status through a takaful or Islamic insurance policy that has been approved by the Islamic Development Bank, based out of Jeddah. And also typically, we also look at the credentials of the underlying project manager to ensure that they have the right track record to move forward. So typically, for example, there's a project that we're currently working on with a particular central bank. They approve the contractor or the promoter, and this project will be structured on an EPC sort of BOT, build, operate, transfer model. But we have the necessary guarantees in place, like performance bonds, etc., to ensure that the funders are secured in a manner.
Okay. Let's go on to some of our questions so far. The first one is Sukuk available in energy and infrastructure projects? I think I can answer that one by saying yes, but maybe you want to add more to that?
Yeah, that's correct. So Sukuk is available for energy and infrastructure projects, and you have the global banks that are involved in funding such projects. Typically, as I mentioned, is you've seen various projects like Saudi Aramco, ABiQ, and various petrochemical companies in the Gulf and the Middle East that have been funded using Sukuk transactions. So yes, it's definitely possible to issue Sukuk for energy projects.
Okay, excellent. Another question here is it possible to fund 100% of the project? Again, there's, in other words, there's no capital being brought by the originator in this case. How would that work? So 100% can be funded. Does that then mean that through the SPV would then own 100% of the project, I assume, until it's completed, or whatever the terms of the Sukuk has been fulfilled? But I understand 100% can be covered through a Sukuk.
That's correct, yes. So 100% can be covered by the Sukuk. Okay,
excellent. And what is the typical tenor of these Sukuks? I mean, what's the time frame in terms of how long can it be? Is it lifetime of the project? Is it a 10, 15, 20? How long would it typically be? Is there a limit?
So typically, I mean, the tenor you're looking at anywhere from 7 to 10 years, but we have seen Sukuks for longer than that, like 15 to 20 years, for example. Okay. So this is the general tenor, but it just depends on a project to project basis.
Okay. Is there certain criteria that you would look at for when would you consider longer than 10 years, for example? Does it have to be government, or can it still be private sector?
So essentially, it could be private sector. I mean, we're seeing a lot of demand from the private sector for Sukuk, especially smaller type of Sukuk structures, anywhere from $20 million up to $50-70 million. Yeah. And we at GIFS, we specialize in that space because we feel that it can become a viable alternative for for corporates and SMEs to seek a diversified funding base. And obviously, given the fact that the Islamic capital markets are quite deep. And the other thing also that I did not mention here is that Sukuk holders typically tend to hold the paper up till maturity simply because the supply cannot keep up with the demand. So this is an important point to note.
Okay. But you did say, I mean, if you say supply cannot keep on with demand, so in other words, demand for Sukuks versus supply of them, is that more is constrained on the process, or is it in terms of availability of funding?
So simply in terms of the process, where there are very few issuers in the market issuing larger funding sizes, like $500 million, $1 billion at a time. And typically, these sukuks, for example, would have only 5 investors or 10 investors. And the market pool is increasing almost on a monthly basis. So there are much more participants looking to fund a sukuk transaction rather than there being more demand or there being more supply. In the sukuk space.
It is a process constraint, in other words.
That's correct. Yes.
All right. Right, so then the next question is, can the sukuk work in concessions, whereby a concessionaire gets a stipulated period to maybe build, own, and operate an asset?
So that is correct. Sukuk can work for concessions. Typically, these would refer to like government concessions, etc. So these concessions do have a monetary value. So it's definitely possible for sukuks to work for concessions.
Example there is, I know of a concession, government-backed concession in West Africa looking in the agriculture sector. Is that something that's all possible?
Definitely, that is possible.
And then time frame on that, because that one, I know the concession is 25 years. Is that something that, I mean, is that something that you would look at? Is it possible to do 25 years in agriculture?
It's very possible to do up to 25 years. Obviously, we have to look at the financial viability and structure that is currently in place.
All right, excellent. Right. Okay, so here's another question. The conventional bonds and debt from any source is a cheaper option for global project developers than Sukuk. Musharaka. Why a project sponsor prefer the Sukuk in this scenario? So I guess it's
look, the Sukuk funding structure is not only around the pricing. A lot of promoters or issuers simply seek more flexible funding mechanisms and other benefits rather than simply the pricing issue. Yes, the pricing issue is one of the fundamentals.
Yeah.
Typically, we've seen Sukuk being priced lower than the average global market, but it obviously depends on jurisdiction to jurisdictions. For example, we had seen last year a Sukuk placed by one of the big banks in the UAE at a rate of 1.8%. But that would typically have been achieved in jurisdictions like Europe, etc. So it just depends on a jurisdiction to jurisdiction basis. But as I said, is that the pricing is just one element of the entire package. You have other issues to consider, including the fact that Sukuk is more flexible, where Sukuk holders are taking asset risk. In a conventional debt instrument, you as the promoter would take the asset risk, etc. So I think those are other considerations when looking at a Sukuk issuance.
Okay. All right. So next one, which countries do we consider? Is there a limitation, geographical constraint?
There is no particular geographical constraint from a Sukuk perspective.
All right. So no geographical constraint there. And I think we've got a couple of similar. So all of Africa is valid. So get in touch with us definitely if you've got projects in Africa and need some funding. Right, then just check. minimum size, transaction size for a Sukuk you will consider? I guess it depends
The
on
minimum,
the project, but just rule of thumb.
so look, I think just a rule of thumb, and looking at it from a costing perspective, on average, especially with larger originators and funders, they would only look at anything from $100 million and beyond, simply because from a cost perspective, it doesn't make sense for them. But for us, since we have been, an originator of Sukuk for many years, we can do a Sukuk anywhere from $20 million and beyond. In certain instances, yes, we could do lower, but then it becomes a case of saying, we could rather have a direct Sharia compliant term loan facility, etc. So there's no real requirement for Sukuk. One of the big requirements for Sukuk to issue a Sukuk is obviously the fact that eventually over a period of time, it becomes sort of like a bond program where you could continuously tap the program to raise capital, and then obviously list the note where it could be traded. So I think, in this instance, it's a case of saying, if there's a project where they require $20 million, in stage one, but it's part of a larger program where further funding is required. I think myself and you had this discussion to say that, if it's $20 million today, in the next 3 months, it's another 20 million. So at the end of the period, we raise $100 million and then list the structure in a stock exchange like Vienna or London Stock Exchange, etc.
Okay. And even I always want to say that for the guys with the smaller projects, if you've got the 4 or 5 million size, if it's part of a phase, the same argument applies. I mean, you would rather do a $20 million structure and then draw down as you require that for your projects. Is there a timeline in terms of the drawdown? I mean, does it have to, let's say I've got 4 phases or 5 million each, I want 20 million, I can get that through you, and I can draw down, let's say 5 million at a time. But is there a time frame where I have to do the 4 drawdowns?
So there's no particular time frame. It will always be on a level of where it is on the basis of a revolving facility.
Okay. That's good. So, okay, the funding is available and you can just pull on it, when you need it. What are we looking at in terms of profit margins, your return, from a Sukuk point of view? On a bond, you're looking at, say, 3 to 5% or whatever. What would that be equivalent on a Sukuk?
So a typical, margin we're looking at currently is around the 3% baseline on a USD basis. But we can negotiate on that rate. So I think right now, it's perhaps the best time to issue a bond, whether it's a Sukuk bond or a normal bond, because you have
low interest.
Because we have low interest rates. So I think there is definitely pressure on central banks to hike rates due to the potential for inflationary pressures, and we're seeing currently huge pressure on the Fed and a lot of sentiments around the potential for interest rate hikes. So that is why on our end also we've been pushing many of our clients to look at tying down low rates for long term, so that they can have access to cheaper capital for longer term.
Right. Excellent. And again, just we've got a couple of questions on timescales again. How long you said typically would take up to what, 8 to 12 weeks, or ever smaller ones you are able to do 6 to 8 weeks, correct?
That's correct, yes.
All right. And then food processing in Nigeria, something you would look at?
Yes, we could.
Good. Block scheme, 10,000, okay. Sorry, I'm just... okay, so I don't know what that exactly means. How long does it take structuring the Sukuk vehicle and inject capital into the project? I guess that's the same question. To set up the SPV is probably going to be your bottleneck, I would imagine. Just legally creating it probably takes longer than actually doing the Sukuk.
Yeah. So typically, I mean, we have like a 4 to 6 week period to set it up, and then another 2 to 4 weeks to conclude everything.
All right. Have you done any agriculture sukuks in Africa? Any examples?
We have done a few. We have done a few private agricultural sukuks. We did one for wildlife funding or wildlife, hunting and that type of thing in South Africa, where the market about 2 years ago was quite lucrative. Also done sukuk funding for beef farming. And we also have recently done sukuk funding for various crop projects in Africa.
Okay, so we've got a couple of examples there already. Fantastic. Got another question. If you know of any prospects, project funding into US, Asia Pacific, Australia for infrastructure renewable energy projects, would you be looking at those geographical areas?
Yes, definitely. I mean, you look at other entities like CIMB, etc. These groups have funded, green. They have done green, green sukuk funding. So this is something that we are, very actively looking at.
All right. ICT, that's the one we haven't covered. Would you do ICT projects? I guess like data centers, maybe.
I think that, yeah, definitely we'd look at that.
Data centers would be, what about mobile network developments?
So I think on the mobile network side, we've just recently funded an entity that provides a particular internet device to a major mobile network operator or a telecommunications company. So this is something that we can look at. We funded them for $3 million, and now we'll be increasing the funding up to $50 million.
Good. All right, so you've done that as well. So good track record there. And then we've got one more. I think we've spoken about equity. The SPV takes the equity in the project in exchange for the funding. So I think that that's kind of the fundamental basis, yeah.
Yeah.
So and again, geography doesn't matter, and almost sector. Is there any sectors you will not invest in? Maybe that's a question.
So I think obviously we won't invest in sectors where it is not Sharia compliant in terms of certain activities. Yeah. We won't obviously invest in existing businesses that have a high debt to equity ratio. So we obviously look at the debt to equity ratios very keenly, simply because you don't want to be in a position where you have a high debt to equity ratio, and once rate starts picking up, then the serviceability of the debt becomes an issue. So those are some of the indicators that we do look at.
Good. Another question here out of the GCC. Would you be looking at oil sector in the GCC? Upstream projects? You want the upstream, offshore like this? Or might not be offshore, but upstream in general?
I think typically for us, we look at more downstream projects rather than upstream, because we see them as being slightly risky. However, if there are proper offtake agreements, etc., in place, then we could look at that.
We'll have a look at it. Okay, sounds good. Well, I think we've kind of gone through all the questions there, and we had quite a lot. We had about 20 questions that we have answered. Yes, so Ismail, thank you very much. I think it was a really insightful session. I'm looking forward to our next session, hopefully in April or later. And then, of course, we've got you here I'm still hoping as a guest at our event in middle May, looking at PPP specific opportunities in Africa and the Middle East. Obviously travel restrictions permitting, but even though we'll have you participate, or hope to have you on our program one way or the other. Thanks again for your time, Ismail, and I guess we'll catch up next month. Excellent. So Thank you for your time, and we will definitely get in touch on our next event. And for anybody that's got any projects, you're welcome to contact us as well on our website, www.abiq.io or info@abiq.io, and we'll reach out and we'll share this presentation after when we post this up, hopefully tomorrow on our website as well. Thank you very much, Ismail. Take care.
Thank you.